You earn more than you used to. Your household income looks solid on paper. You contribute to investments. You avoid obvious financial mistakes. From the outside, your situation looks stable, responsible, even successful. And yet, you still feel tense when bills hit. You hesitate before committing to long-term plans. You don't feel secure, not in the way you expected to. If this sounds familiar, you're not broken. You're not bad with money. You're not secretly irresponsible. You're doing many things right, but it still feels wrong. That feeling doesn't announce itself loudly. It follows you quietly through normal days. It shows up when you open your banking app. It shows up when plans change unexpectedly. And it lingers, even during good months. This video exists for that exact feeling. Not to judge it, not to dismiss it, but to finally explain it. Here's the confusing part. Your income went up. Your financial knowledge improved. You're more disciplined than you were in your 20s. You budget better. You think longer term. You avoid obvious traps you once fell into. But the stress didn't go down. In some ways, it feels heavier now. You feel fragile instead of confident. One surprise expense still disrupts your sense of control, and you quietly wonder how people earning less sometimes look calmer. You don't feel lazy, you don't feel reckless, you feel uncertain. That uncertainty matters because it's not emotional weakness, it's your mind detecting something that doesn't add up. You're doing more but feeling less secure. That contradiction is the starting point. Here's what most people don't realize. Most investment strategies are designed to be static. They're built to stay mostly unchanged for decades. The assumption is simple. Once you choose a strategy, you commit to it, and time does the rest. Those strategies assume stable careers. They assume predictable monthly expenses. They assume a straight upward path where life doesn't interrupt the plan. But your life doesn't behave that way anymore. Your responsibilities change faster than your portfolio can adjust. Your tolerance for risk shifts quietly as stakes get higher. What once felt like long-term money now feels emotionally closer. Your priorities evolve, but your strategy often stays frozen. So even when you're disciplined, even when you're consistent, something still feels off. Because you're following a structure that was designed for a different version of your life. That's the hidden cause. Not poor habits, not lack of effort, not financial ignorance. A strategy that no longer fits the life you're actually living. And when a strategy stops fitting, confusion isn't a weakness. It's a signal. To understand why this feels so confusing today, we need a bit of perspective. 30 or 40 years ago, financial life moved slower. Careers were more stable. People changed jobs less often, sometimes only once or twice in a lifetime. Income paths were more predictable, and planning felt safer. Housing markets were less volatile. Healthcare costs were lower and easier to anticipate. Major life expenses arrived in a more orderly sequence. In that world, set it and forget it actually worked. Not because people were smarter, but because life itself didn't shift as frequently. Now, look at a modern couple in their mid-30s. They earn decent money, they invest consistently, they follow responsible advice, but they're also managing childcare costs, career uncertainty, rising housing pressure, and the early financial needs of aging parents. The income may be higher, but the margin for error is smaller. Same basic advice, completely different environment. That's not a personal shortcoming. That's old guidance colliding with a new reality. And that collision creates stress people can't quite explain. This mismatch doesn't show up as a big crisis. It shows up quietly in ordinary moments. You hesitate before increasing your investments, even when the numbers say you can afford it. You keep more cash than you planned, not because it's optimal, but because it feels safer. You delay decisions, not out of laziness, but because certainty feels harder to reach than it used to. You run scenarios in your head. What if income changes? What if expenses rise? What if something unexpected happens? You're not indecisive, you're responding logically to uncertainty. But over time, this response has a cost. Constant second guessing, mental fatigue that never fully resets, a low-level tension that follows you through normal days. This is the trap. Your strategy didn't collapse, it didn't fail dramatically. It simply stopped evolving with your life. And that's why the stress feels persistent, even when nothing is technically wrong. Here's a shift that brings real clarity. Your investment strategy is not a fixed rulebook. It's not something you set once and never touch again. It's a living system that should change as your life changes. As your responsibilities grow, the role your money plays in your life also changes. What once felt like distant, long-term planning now feels closely tied to everyday stability. Your emotional capacity for risk isn't constant. It moves with stress, with family obligations, with how replaceable your income feels at a given moment. This isn't about being conservative or aggressive. It's about being aligned. This isn't market timing. It's life timing. When you see your strategy this way, the confusion you've been carrying starts to make sense. Nothing was wrong with your discipline. Nothing was wrong with your intelligence. The strategy simply stopped matching your reality. Let that sink in. Evolution doesn't mean constant action. It doesn't mean reacting to every headline or market move. And it definitely doesn't mean chasing the highest returns. Real evolution is quieter than that. It shows up in structure, not activity. Early in life, the priority is usually growth and flexibility. You can recover from mistakes more easily. Time is still on your side. As life becomes more complex, priorities shift. Stability matters more. Resilience becomes valuable. Your strategy needs to absorb shocks, not just grow. Later, predictability and protection take the lead, not because growth no longer matters, but because reliability starts to matter more. A thoughtful strategy balances growth, defense, and liquidity. Each part plays a role. Each part supports a different version of your life. This isn't about complexity, it's about intention. When your strategy reflects where you actually are, decision-making becomes calmer, and calm decisions compound better than anxious ones. Let's come back to where we started. You earn more than you used to. You're more careful. You're more informed. And yet, something still felt off. Now you can name it. Your life evolved, but your investment strategy stayed the same. When a strategy no longer fits, stress becomes constant. Decisions feel heavier than they should, and progress feels fragile, even when it's real. Alignment changes that. When your strategy reflects your current life, money stops feeling like a threat. It becomes a support system. This isn't about motivation. It's not about pushing harder. It's about understanding. And understanding gives you something better than confidence. It gives you clarity. If this helped reshape how you think about money, you'll find more conversations like this here. Subscribe for thoughtful, honest explanations about how money actually works in real life.